Hello, my name is Justin Charlton-Jones. I'm one of the coaches in the No Limits community, and I'm going to talk to you about how you can ensure the financial security and stability of your business for the long term. Now, a lot of people wonder what financial stability is. The term gets bandied about a lot, but do you know what it is? And more importantly, how can you ensure the financial stability of your own business? Generally speaking, a financially stable business is one which can survive the loss of a significant customer or an important team member, a drop in sales, or other monetary issues that would perhaps be the end for other companies. Your business will, of course, feel the consequences of these things, but it will be able to move forward instead of shutting down. In other words, financial stability is what makes or breaks a business. And I'm going to talk to you now about 6 ways in which you can make your business more financially stable, which should ultimately be one of the goals of every business. So the first way to create financial stability is to build customer loyalty. Having a loyal customer base is a great way to ensure you don't go out of business, even if you experience financial difficulties. If your customers are happy, they're more likely to remain loyal to the brand. They're more likely to recommend other people to your brand. And on top of this, if you make a mistake, they're more likely to forgive you. Now, believe it or not, on top of offering excellent customer support, you can actually make your customers happy by providing the ability to make recurring payments. This payment method allows you to just take money directly from your customer's account, but importantly, it saves them from having to remember an organized payment. Most people are familiar with these types of payments. For example, if you have a Netflix subscription or Sky Television, you probably make payments through this method of recurring collections. Similarly, most people pay for their insurance and their council tax like this. But actually, a lot of customers actually prefer an easy payment process, and actually it helps them to remain loyal to a brand. So think about doing this if you're not doing it already, because not only can this make life easier for your customers, it helps to make them loyal. But one of the best things about it is that you then know what revenue you're going to receive every week or every month, depending on what you've arranged with your customers. So barring upsets, you have a very consistent cash flow, which can be reliably predicted. A second approach is to make sure that you are monitoring your outstanding invoices. You need to know who are your debtors, who are your creditors, and you need to make sure that you pay your bills, but also you collect the bills owing to you in a timely manner. And if you don't know who owes you money, you can't chase them for outstanding payments. And without that knowledge, you might be losing money without even realizing it. Some people are still managing invoices manually, or they're collecting it, or they're doing it all on paper. If that is the case, you're going to have a hard time keeping on top of them. You'll probably need to hire people to do that. What most people do these days is use accounting software, and all accounting software will give you a clear overview of your invoices, whether they're paid, whether they're pending, whether they're unpaid. And this helps you to monitor your cash flow. And that's the key point of tracking your payments. Accounting software can also send out automated payment reminders until the customers make their payments. A quick point to think about, though, is that even though automated payment reminders work, they don't guarantee payment. Sometimes you're more likely to get paid on time if you offer an incentive, if you offer some sort of discount for your customers to pay you early or before the due date. For example, some businesses have payment terms which are described as 2-10 or net 30. What this means is that if the customer pays the invoice within 10 days, they get a 2% discount. But if not, then they pay the full amount within the standard terms, which is at 30 days. Just make sure, though, that if you do decide to offer a discount to your customers, you make sure that you explain very clearly the terms and the possible discounts to avoid confusion. But the goal here is to make your invoicing as straightforward as possible to increase your chances of getting paid faster. The third point is about your financial records. in order to be financially stable, you must have bulletproof financial records. You need to have all your financial documents in order, because only then are you going to have a clear overview of your finances. Are you going to understand where your money's coming from and where it's going? Also, if you haven't got that consistent record of your business's earnings and also your expenditure, you're not going to be able to spot inconsistencies. If your P&L is showing an unexpected loss one month, it's only by going back through these records that you're going to be able to identify what might have caused that, and perhaps make changes then to maximize your earnings or lower your spending. Another point is that if you haven't got these accurate financial records, how are you going to know what progress you're making towards your financial goals? And finally, if you haven't got accurate financial records, how are you going to calculate your taxes, such as VAT or corporation tax? If you haven't got good records, you risk making an incorrect tax calculation, which could lead to a fine. So it's really critical that you have absolutely bulletproof financial records. The fourth point is about leveraging technology. There are lots of digital tools available. You can offer digital payments, for example. Many people use contactless or chip and pin payment methods for most of their day-to-day purchases. It's forecast that this year, digital payments will make up more than half of all e-commerce payments. And the popularity of credit and debit cards is going down. So your customers are used to and they expect to make payments digitally, so make sure you can accommodate them, and this will give you a much easier way to collect money. You're not then waiting for debit or credit cards where they might even take a commission, or you're not waiting for a check to clear. The fifth point is about keeping debt under control. Most small businesses fail due to cash flow problems. So it's really critical you know what cash is available to you and that you're able to match that to your expenses and your direct costs. A lot of businesses at the moment have lockdown loans to pay off as a result of COVID, or some who fortunately had products that benefited from that experience borrowed money to expand. If you have got debts, make a plan to start paying them off. Because you never know when a rainy day is next going to come around, which could result in you having to borrow even more. So by paying off your existing debts, you reduce the risk to the business, and you also make yourself potentially more likely to be able to apply for credit. If you can, have a safety net. Talk to your bank and have an open line of credit specifically for those events. You might want an overdraft, something like that, which you don't actually use, but it's there in case you have an emergency. The other thing to do is to start building up financial reserves within the business. Start saving now if you don't want to get into debt the next time the business goes through a rocky financial period. And then the final point is about seasonal trading, seasonal cycles. A lot of businesses are seasonal, and they earn most of their revenue at specific times of the year. And outside of those periods, they have fewer customers and they bring in less money. If you have a business which is seasonal, even if it's only over Christmas, just be aware of this, because that's going to affect your cash flow. It's going to reduce it considerably. However, the overheads in your business may still be constant. So to avoid issues with your cash flow, if there is any element of seasonality in your business, think about keeping back some of your revenue so that you have enough for the next months. Just because you've had a really good bumper month, don't take out all that money from the business. Keep it, save it. Wait until you've seen what's happening before you actually decide whether or not you're going to need it and whether you can actually take it out of the business. Think about ways of saving money during slow periods. So if you know that your business is going to slow down at a particular time of year, cut back on ordering stock. Keep the money in the bank until you need to buy things. You might think about decreasing the number of hours that your staff are working if necessary to reduce your salary overheads. Probably really important though, is to make a budget. And this applies to all businesses. You should all have a budget for the whole year, which anticipates how much cash you need in order to see you through each month of the year. And if your business is seasonal, then you need to account for the slack periods, look at what overheads can be reduced, and think about how much cash you need in reserve in order to be able to survive. So, in conclusion, if you don't want to be one of the businesses that end up closing due to financial instability, you need to start looking at your finances and fixing them before the problems hit. If you can control your payments and debts, you can keep good financial records, provide excellent customer service, then you're well on the way to financial stability. And if you compare that with automating your processes in terms of payments, etc., using technology, then you're well on the way to a business that can survive through rocky times.